uncle, right? Like a little piggy. It's exactly what we have happening. We had a sort of a confluence of positive events. So NVIDIA came out yesterday with just
that was wild,
gargantuan guidance, and AI has become sort of the absolute buzzword of the word. As a matter of fact, by the way, I'm going to preview you for something. Our partners, ACAP, who we all work with, we do a Trader Fest every year, and I'm going to be doing in the end of July a Trader Fest on AI and trading. So that's going to be very, very interesting. We're going to talk about
it's going to be a virtual, right?
Virtual, like always. Yeah, it's going to be a global event, as always. We get sometimes 8,000 people coming into the event. So it's going to be on a Saturday, like the 22nd of July so far. But it's very, very early. I'm just kind of teasing it to everybody. But yeah, it's the main topic is going to be AI, algorithmic trading tools, all the things to make it much easier for traders to trade. We do this in my room all day long. Today, I was demonstrating my tool and how I started using it for counter trend trading, just as well as I was using it for trend trading. What's beautiful about having a tool is that you don't have to watch the screen every 5 seconds in order to be able to execute lots of different trades. It's just incredibly powerful that way. My friend Austin Silver from Austin Silver FX, who we all know, I think is also a partner of Surge with you guys, guy. So he tweeted out today, he was like, would you rather be a trader who watches the screen 6 hours a day to make 1% a month? And I'm like, no. But if you have a tool that watches the screen 6 hours a day to make 1% a day, which is what my tool does, it's a lot easier,
Right, absolutely.
One is, it's not a binary question anymore in the modern world. You can do a whole bunch of really hard work of trading without you actually doing the work. That's the beauty, I think, of the modern tools. Software really can work for you. And I think
we've had algorithms for years, though. What do you now with AI and the advent of all this new stuff? What does it look like 2-3 years down the road from now?
I have no idea. Honestly, it's crazy.
It's moving very quickly.
It's moving very, very quickly. What I will say is we've had algorithms for years, but they've been a very monkish kind of an excellent enterprise. In other words, only if you were an engineer or a software developer could you really unleash the power of, or a complete geek in computers, could you unleash the power of software agents. What AI has really changed is that every man, common man, anybody who speaks English can unleash the power of software agents, and that's just really, really powerful as a tool going forward.
Interesting, right? So it's the accessibility is going to be more. So maybe somebody has a great trading idea, but they don't know how to code. AI could fill the gap for them.
At 100%. 100%. One of the things I'm going to show actually at the show is I created a whole bunch of proprietary trading view indicators, which we just released. We just released a course called the Bootcamp course, and it's reversal indicators, trend indicators, and breakout indicators on TradingView with signals, like actual physical signals, with ability for you to set your own risk-reward ratios, and you can literally see them, take place across the chart, across every instrument. And I did it without knowledge of any code. Like I did this literally all with AI.
Really? So you gave it parameters and it wrote the code for you.
It wrote the code for me. I mean, I can't say that.
Sure.
I didn't have to really work hard on getting organized. But the point is, I was completely untrained. But what I was trained in was trading, which is like,
right.
I think that's another thing that's very interesting is there are a lot of people who have tremendous domain expertise, but don't necessarily have coding expertise. And there are lots of people who are coders who we all know are terrible traders, right? So like, you try to explain to an engineer what you're trying to do with a trading concept, and we've all been there, where it's just it's actually in frustration because they don't really understand markets. But if you understand markets and you understand how things move, you can create some incredibly useful signals and indicators, and all sorts of proprietary tools for yourself. Without necessarily knowing the code, which is really cool.
I guess also another great benefit is time to market. Like, you don't have to go back to the engineer and, change this, change that. You can kind of just plug and play right at your own terminal.
To give you an idea, I prototyped 8 indicators in a weekend, and then refined them over another week, and they were ready to go. So like, awesome. The speed to market was incredible. And now people, really, really like it because, it's very cool. And then we took a lot of Kathy's ideas I mean, Kathy, she's great at trading, but she hates technology. So we took a lot of her ideas. And again, it's the same thing. You have to understand trading to be able to truly translate that into something viable on the chart. And engineers just don't. I mean, they're good at engineering. And so that's why I think AI is such an incredibly powerful force these days. It puts the power of computation at the fingertips of everybody, and then they can use it in very creative ways. That's the thing. It just unleashes all that creativity, in my opinion.
Right. Cool. Well, it's exciting. I'm glad to see where it goes, and wish you all the best with the coding. Sounds exciting. Are you going to be doing a class on how to are you teaching people to do that as well?
Well, the Trader Fest is going to be, it's not going to be a step-by-step course. It's going to be just a discussion. We'll show various things that people
introduction.
I'll give you an incredibly simple thing that somebody who's new. There's a lot of people always come to us and go, I don't know anything about fundamentals. I don't know what's important. I don't know what I should be looking at. Right? You could literally prompt ChatGPT and say, please give me a table of 10 of the most important economic indicators on the Forex calendar, and it will and I'll show it to them. You could do a beautiful table ranked. I mean, properly ranked. What's 1, what's 2, what's 3, and what you should be looking for. And instantaneously, in 5 minutes, you are better educated than if you had been, or you're as well educated as somebody who has an economics degree from Columbia, like I am, because you know exactly what to look for. Another simple thing: give me a table of all the central bank governors in the G12 region, or in the major FX region, and it will tell you who they are. So then now these are the people I should be listening or I should be watching for. I should put them on my Twitter feed because what these people say that moves markets. Like there's just enormous amount of power that you yourself can have instead of having to wait for experts constantly telling you.
Right. And then you compare that with or add that into something like TweetDeck, and now you've got real-time news at your fingertips.
And then, the other thing is that people really, I think, underutilize or underappreciate is it's an amazing teacher in any, I'll give you sort of a silly example. My daughter is in 5th grade. She's going through science, and actually she's learning all the science that I never learned. Like families of, that we're a primate family. There's phyla, there's all sorts of stuff, all this biological classification, which I either forgotten or completely didn't learn. And there's all these Latin words, and I didn't know what the hell they are. And I just go to ChatGPT. I say, explain this to me, and it does a beautiful job of explaining exactly what the concept is in a completely vernacular, easy to understand way. So as a result of it, she got 100 on her science test. But when it comes the way it comes to trading, is you could do the exact same thing. Explain to me what a double top is. Explain to me what what Elliott wave is all about. Explain to me who W.D. Gann was. You don't need to read 1,000 books in 1 hour. I can impart more valuable knowledge to you than all the stuff that we used to do.
Do you think higher education goes that route as well? Are we going to need college in 10 years?
That's a very, very hot topic of conversation. I mean, I certainly think that I love college. I think college has enormous. I love liberal arts education. I'm a huge proponent of all that. I just don't love liberal arts education at $250,000.
Sure.
I think there is this massive disconnect between what college costs and what it should be, and so I do think it's absolutely ripe for disruption.
Interesting. We'll keep an eye on that.
Yeah.
So give me a recap of the week. I know we had we had PCE come out. We had, like you said, Nvidia. I think there's talks of another rate hike on the table now. We've got a lot to discuss.
I don't know if we have the rate hike. And PCE clearly, everybody got shut up. The irony of the whole thing is PCE came out. You would have thought that would have killed stocks, and it just they shrugged it off in 5 seconds and just blew it up. The bigger stories here is, honestly, your guess is as good as mine because
Sure.
We're all just we're seeing price action and then we're narrating off the price action. But what I would say is the critical stories that we talked about was we were very, very worried about the debt ceiling, right? It looks, and again, the word is looks. It's not done yet. Like they're coming. They just decided they're not going to, do a Mexican standoff. Is that
Mm-hmm.
the term? Like where you shoot, you point guns at each other.
Yeah.
And nobody wins, everybody loses.
Uh-huh.
it sounds like they're going to come to some kind of a deal, which is fine. That's a huge relief for the market because obviously you don't want to stopgap the financial system at a time
Right.
what's going on. The second thing I think is going on is that the economy is clearly far healthier than everybody thought. That every bear it's very funny. Somebody said that, the more wrong you are, the more money you lose, the angrier you get, right? So the more vociferous your arguments get. Like, right
Sure.
now, if you look at the bear arguments, they're like, you're all morons. You're all going to lose your money. I can't believe you're all buying this stupid market, as it keeps going up and up against them, because the people who are actually losing money are all the bears. So I think it's natural, but you need to take all of the bear griping with a barrel of salt. As I was saying, there's nothing on the fundamental calendar that spells gloom and doom, right? Having said this, though, we are clearly in stratosphere at this point, both price wise and economy wise, and we certainly could have some kind of a corrective price action. But if you think about everything that everybody thought that was going to happen, oil going to 100 because Russia stopped pumping oil and OPEC decided to stop pumping oil. China attacking Taiwan, Russia doing terrible damage in Ukraine, and then maybe moving on to the rest of Europe to conquer it. Like, none of those things have happened, right? The world keeps ticking along. We're actually better today than we were a year ago, much better today than we were a year ago.
Sure.
Yes, inflation is terrible, but so is, your salaries have all risen. And the point is that inflation from this point onward is not rising nearly at the rate that it was rising before. So it's kind of like it was a one bump thing, and then, we're sort of steady. It's hard to make this argument of being an uber bear. On the other hand, chasing price at this point is a little difficult,
right,
if you're a long-term investor. I'll tell you, we came up with a really, I showed you guys how to sort of, buy bottom, sell tops last time. We've came up to even a better, more methodical way of doing that. And I'm happy to share that with you if you guys want to.
Yeah, please.
We can, if you want to talk trading right now, because honestly, look, we can talk macro till kingdom come. Bottom line is, nobody knows. We need the deal done. That's going to be a big relief.
Right.
Clearly, Nvidia and AI is a big story. The rest of the real economy seems to be doing okay. I don't think the next big existential event on the calendar is the Fed. Do they hike or not? I think it's a push, with my leaning to no. That they probably are going to say it's better to pause. Like, what they're going to say is, we reserve to hike till kingdom come. We're not going to stop if we see but we feel that we've hiked enough at this point. Financial conditions have tightened enough that we want to see next couple of months worth of data to see. And I think that would be very wise, because the problem is, in my opinion, is that they do hike right now. The banking system, the rest of the banking system is still very, very vulnerable. And of course, all of that, you have to understand that everything in finance is backed up by, it's one penny backing up about $1,000, right? It's
right.
So it's always, when I was in FX, at FXCM, we used to always joke around. Oh, we do $3 trillion a day of notional in FX.
Right.
It was basically $1 that the guy was trading back and forth, maybe because of so much leverage. Well,
sure.
Same kind of a model exists on the financial in banking space. In banks, nobody has any actual money. They're levered tremendously against it. So any rise in interest rates is just reverberates tremendous. It multiplies by 100-fold. It's 25 basis points does not sound like a lot to you, but it's 250 basis actual points to somebody who's 10-to-1 levered. That's very damaging. So I think the Fed appreciates and understands the the power that this can bring to bear, and they are clearly not. I think they're going to be more cautious. They're going to let cautious speak. Maybe I'm wrong, and maybe I'm misreading them, but I do think they're going to be a little bit more cautious. We're not so grossly inflated that they have to act. And if they don't have to act, they're most likely going to stay on a pause. So that's sort of, I think, the macro read. We can come back in June, because next week we have the holiday, we'll be off. But we can come back in June and see where we stand. Things go. But for now, clearly the lesson of the week is that doomsdayers were completely wrong, and things are not as bad as they seem. So anyway,
good outlook.
Yeah, it's better to be positive than negative in my opinion, always. Let me share my screen. We can talk. We can go through all the. Um, sorry, let me find the right. Oh, here we go. Okay, so I'll get a little bit bigger. Let's see if you guys see my screen here.
Producer, can you share the screen, please?
Yep, when I see it, oh, there we
Perfect.
go.
There we go.
I'm gonna get a little bit bigger because my screen. I have like this huge giant monitor. It's just like it's a double monitor.
Sure.
So it's kind of hard to see. So, let's talk about my trading techniques, and then we can talk about all the assets and just go through the assets and see what they're doing, right? Sorry, and I'm just trying to watch my other stuff here that's going on here. What's going on over here? Okay, that's all done. All done. All right, fine. So remember I explained to you that our bounce methodology paints the absolute high of the day, the middle of the day, and the low of the day, right? It's like it's like a football field. It's basically a football field or a soccer field. This is defense, offense, midfield, and so on and so forth. So if you look at the quarter line, which is these dashed lines, there's a green line and a pink line. They're kind of like the goalie area. They're kind of like the most important area, both for trend traders and counter trend traders. So our methodology is that we don't, if we're going to be, so if we're above the midpoint, we're always buying. If we're below the midpoint, if we're in trend mode, we're always selling, right? Mm-hmm. So we define trend as price below the midpoint. That's a downtrend. And price above the midpoint is an uptrend. Clearly today is a very, very strong uptrend day, right? We've been above midpoint since 10 o'clock in the morning. This is US 30, 10 o'clock in the morning. The NASDAQ has been above midpoint forever.
It's hard to see. What time frame are you on?
This is a 1 minute time frame. Okay. This is 10 o'clock in the morning. I can get a little bit bigger. Let me see.
No, it's okay. It's we lose some of the left side of the chart here.
Yeah, I mean that's fine. That's not important because I'll zoom out. But my point is that if you're above, this is positive trend, right? Now, mm-hmm. What we do is we say to ourselves, if we're going to be buying, we only want to be buying above the midpoint, but not above the 3/4 mark, right? And the reason why we don't want to be buying above the 3/4 mark was because we don't want to chase. We don't want to buy the top or sell the bottom. Because at that point, we're kind of, we're chasing price above. The sweet spot of trading is from the midpoint to the quarter point because that's the highest probability. That's when the trend is just starting and you have the highest probability of trading. So you want to be in here. So that's our trend condition, right? But then we kind of looked at the chart this week actually, and we said, hey, you know what? If we're using this logic for trend, then there is just this imminent logic. And by the way, and by the way, our trend trigger is when we go from selling conditions to green conditions. So that's like right over here. This is my long trend trade here. If I want to be long the US 30, I'll make this, I guess, black so you guys can see this. You see the arrow over here, mm-hmm. Right? This candle over here, or maybe I'm underneath here. You see how price goes from negative momentum to positive momentum, right? That's my trigger. This candle closes, and I get long here, and that's my positive trend, right? So that's logical, good quality trend structure trade. That's what we do, right? But then we're looking at the chart this week, and we realized if we're going to apply this logic, for trend trades, there is really interesting flip logic for reversal trades. Because if you think about what reversal is basically an exhaustion off the top or an exhaustion off the bottom. But, and this is the critical thing, you don't know when exhaustion will happen. You don't want to guess when exhaustion. You don't want to be guessing this is a top. You don't want to be guessing this is a top, right? You want the market to show you it's a top. So our methodology is kind of very simple but very powerful. We say to ourselves, price has to hit session highs right here, right? And if I go into replay mode, just to show you so that I'm not cheating you, that's not enough for us to. I'm gonna go candle by candle. That's not enough for us to decide that we're gonna trade a reversal trade. Price is hitting session highs, and the trend is still green. You see the momentum is still green. It's making new session highs. Every time you try to sell over here, you would have been killed. You'd have been killed, right? You'd have been killed because you don't know where the top is. It just keeps going up, keeps going up. We're fine with it. We're just letting it, make a top until the following happens, right? We're making top, and now, for the first time, we have a clear indication of a possible top because prices hit all-time highs or daily highs, and now we finally changed momentum from positive to negative. So now this is what we talk about. We call it the right side of the V. If you're selling, you want to be on this side. You always want to be on this side of the V. If you're buying from the bottom, like last time we were buying
Sure.
it, buying on this side of the V. In this time, we want to be on this side of the V. We want to be selling on this side of the V. So our entry would be like over here. And actually, just to give you an idea, it's not like it's instantaneously works. I think this trade goes back up. So you will. I'm not sure. I mean, if we trade, I think we're trading with a 20-point stop, so this probably would have stopped me out. And our attitude is we go as long as the price is in the upper quadrant and continues to go from green to red. That means continues to lose momentum. We'll get short. We get stopped out. We'll get short again. We'll keep trying. We keep trying because it will break to the downside sooner rather than later. See?
Sure. Yep.
And here's the interesting thing about all of this. If you're a sort of a swing trader, we're scalping, so we're in and out, in and out. We just, okay, we get stepped out, we go back in. We go stepped out, we go back in. That's fine. But if you're not a ADD addled, scalp trader like everybody else in if you're not a degenerate like everybody else in my room, you can be a swing trader. And the point is, this is a very clear, definitive swing high for the time being. You could say, you made the high, price went from green to red. I'm going to be short. And until and unless I break the high over here, I'm going to stay in this trade. And then this trade just simply drifts nice and down. And you could, continue milking it, maybe take half off, continue milking it, and trade much better than I do. And now we go from the quadrant all the way down into the middle, right? And you see how much easier it is to find a top and a bottom because you have a logical entry, logical sequence of events. You are not guessing. You are letting the market tell you, and the market speaks to you. And as long as you have the right indicators to interpret its conversation, you have an incredibly high probability of success doing this, So that's sort of like we took our idea, which is we've always traded on a trend basis, flipped it on its head, and it's doing great. It's doing just as well the other way as
reversal.
Reversal as is doing trend, some ways even better, I would say, definitely killing it on a couple of accounts here. So,
right.
That's the whole point. You need to be very flexible.
Do you have an example you could show us of it in the inverse for the trend?
Yes. You mean like to do a trend trade? Well, I showed you the trend trade earlier. Like this was a trend trade over here, right?
Sure.
But we can go to NASDAQ. NASDAQ has been just a super, super, super strong trend. As a matter of fact, I think NASDAQ has not yet given up its short here. You see here, here's a short. Like if you're a swing trader, you would be short over here holding against this high, and it may stop you out and may take another attempt to try to short this. If you're a scalp trader like I am, we actually made money on this one, but now we're trying to scalp it over here. We just got stopped out, I think. And now we're going to try to sell it, the third time once it loses momentum. Prices always lose money. Here's what you need to understand. Prices always turn.
Right. Exhaustion. Always reach some level of exhaustion.
The problem with most traders is they don't have the patience to wait, and they also don't have a methodical, logical criteria for determining when prices turn. And we have both, and that makes it a lot easier to be able to trade it. So, so we're turning. But what I was going to say is the stock market is generally an upward sloping asset, right?
Right. And
it's much easier to buy dips than it is to sell rips. Like this is hard work to sell rips. We're like, we had 3-4 trades to resolve before we could resolve these rips. The dips, will resolve in 1 or 2 attempts. I mean, if you look at buying dips. Let's go to the replay mode, and that's because the stock market is always, it's so much easier to buy the bottoms in the stock market than it is to to sell the tops. Nasdaq has just been really, really super strong. It doesn't even have any bottoms. Like it's been really. I'm just trying to go back. I think Nasdaq is almost a bad example today because it's just been such a
right.
such a thing. Let's go. The US 30 was much weaker earlier in the morning. Okay, so let's go to US 30, and I'll show you. Here's US 30 on the bottoms, and I'll show you how this the whole buying the V really helps you. So you see this pink line, right? The way we would trade this, and I'm going to go candle by candle, is we are now in what I call the buying quadrant, right? So there's a couple of ways you can trade it. You could say, well, if price dips into the quadrant and then goes from red to green, momentum changes to positive, you could get aggressive and just buy here at the 52s, right? And and that will help you, and you will see how the price really starts. You see how the dip starts to work, and it really starts to rip around, right? But then price will again starts to dip. US 30 today was very weak. Again, you could have traded this little dip into here, but that would have been, I think, not quite to spec of what my setup is now.
You were playing 10 and 10 or 20 and 20 on this one.
We traded playing 2020. We always trade. Okay. You can't. US 30 is too many. It's inefficient to play 10 and 10 because the spreads are wide, especially early in the morning, and it's just too volatile. You want to give it 20-20 minimum. This should be your minimum trade in US 30. So now we're like very close to the bottom. Now this is a more legitimate buy to dip type of structure, and I'm just waiting until I get a green signal. I get a green signal here at the 26s, right? And I'm looking for 46s. So let's see what happens. Right, I think I dip. So I think I get stopped out. I get a second signal here at the 21s, and I'm looking for 41 now on the trade. And boom, and the dip rescues me. It takes 2 trades, and now we bought the tip. Now imagine you were a swing trader. Imagine you take my scalp and say, oh, Boris is trading for 20 pips. I'm going to buy the 21s. I'm going to put a stop at 93. What is that? A 40, 50 point stop? Mm-hmm. And I'm going to trade with a 2-to-1 risk reward ratio. I'm going to do everything right. I'm going to do everything that he doesn't do because I have really good, trading habits, and I'm a better trader than he is. Well, you're coming in at 21s, say a 40 point stop, right? 40 point stop, 80 point target. 80 point target is basically a 32, 800, right? So that target is done. Takes a while, but that target is done in from 624 to 703, 40, less than 35 minutes. You've made 80 points in US 30 with no sweat because you knew where to enter, you knew how to enter, you knew what to enter. That's our triumvirate. My whole formula for success is what, meaning you got to know what instrument to trade, when, you got to know when to trade it, and then you got to know how. You got to know how to trade it, and that's that's in that sequence. Everybody always focuses on the how. The how is the least important, but it's the least important part of it. If you don't trade the right instrument at the right time, in this case, the right space, doesn't matter. You're randomly trading. Right. So that's my little Memorial Day gift to you guys. You obviously can trade with us. Come trade with us. You're as members of Surge, you guys get access to our rooms, and then we'll also have a special discount for those people who want to try Surge again, or maybe retry Surge again. We'll have a special discount so you could get it even for less, and I'll be happy to post that out. But we are very, very happy to have new members in our room. Once they see me, the thing is that once they see me doing this live and they see that it's really possible, it's not just theoretical, it's actually physical. They see the P&Ls, they see every day the P&L growing. It really gives people confidence, and they get much more excited about the possibility.
Yeah, guys. Boris does this live every day in his room. You can see these trades every day. He gives you these gems, these methodologies, and Boris, like you said, it's not only for scalping. People can adapt this to swing trading as well.
Oh yeah. And there are people in my room who trade this much better than I do. It's really it's just a matter of personality, whether you have the patience to trade this. But if you have the patience, these trades can be multi-baggers. They could be 3-yard trades. if if you do this properly. So yeah, it's very, very exciting, very powerful to be able to do this. Yeah, very excited
Awesome.
about it.
Well, can we go through our usual
Yeah,
oil, gold? Take us
let's do.
through and
Let's go. Let's go look at the assets. So we are. Let's go.
maybe hit some currencies today too, since Kathy's not here.
Sure. Let's do oil first. Oil. Oil holding bid. I mean, remember, so oil story is the same story as it was before. Higher lows, positive bid, buy the dips, don't sell the rips, stay bid. Basically, to me, I've been saying stay bid oil. We came off the 74s, but it's basically a 71, 74 range. And unless we break the 71s, every dip is a buy. It's a slowly upward trending thing. This is basically a bet on the fact the global economy stays relatively buoyant, that supply conditions still remain relatively tight, and that not everybody's going to buy a Tesla in the next month or so.
Right.
So I think oil structurally very, very bullish. Gold, on the other hand, is a dog. What was the one thing I look at? We even had look at my marks.
Yep.
Look at my marks here, right? I said this is the last time I left you. I said if we break the 75s, you can kiss this goodbye. Where are we? We are 30 points below. We're down there, right? And this is and that's the thing. The trading is not that complicated. What's complicated is people's stubbornness. If you're a gold bug and you have this absolute unbelievable belief that yes, gold has to go up because inflation is through the roof. No, it doesn't, and it's clearly right now.
Let the price action tell us, right?
The price action is clearly telling you both your fundamental analysis, your technical analysis is wrong. And to me, it's relatively simple to take that. We saw that. We talked about the fact that look, gold was great, but it did not confirm the bull because it never broke the 2100. And then it started to slide back. And once it started to slide back and it started to test these 1975 level, that was very dangerous. Now, we have a little bit of support here. I have no idea what's going to happen next. Like right now, I'm neither a buyer nor a seller. I like to watch the price action. But I tell you what, if gold kind of slips below, and the critical thing here is slips and stays. You want it to stay. This is a 4-hour chart? I think it's a 4-hour chart. You want it to stay for a couple of where people I think get very, very tripped up with technical analysis and everything else. Let me sort of show you is you'll get these, you get like a test of the level, right? Here's a test of the level with a big wick. It just bounces right back. Mm-hmm. And then people just, sell right here thinking, oh, it's breaking down. No, testing is less than testing is, as a matter of fact, is probably the opposite. You probably want to, if it tested and bounced back, you don't want to be thinking that this is a sell. So it means nothing, if you have a thesis. What really matters is if it stays, if it breaks and stays there for a while, and more importantly, stays there for a couple of candles, that they're able to keep the prices low. Because at that point, sentiment really starts to change. And you see now, then, now that they kept it 3 or 4 candles, yes, you have like a knee-jerk reaction back. But if you're using the prior resistance level as your stop, you have, you're more than plenty of ample room to stay in the trade, and then eventually starts to, to fall. You got to go with a dominant. I remember we're talking about the idea of you have to read the market, and you have to use your tools to read the market. This is basically, reading the market, and the market is speaking to you. You just, you choose not to listen, but if you choose to listen, the market is speaking to you, and it's telling you very powerful things. So the most important thing about technical analysis is not Fibonacci, is not moving averages, not support resistance, certainly not what is that, order blocks and ICT and all the other crap that I see on YouTube. Which, by the way, amazing techniques for trading the past. I've never seen so many past trading view billionaires as I've seen all those guys trading the past. Truly, my hat's off to them. But if you want to be trading the future and the present, the most important thing is actually understanding that prices have to hold below key levels or above key levels to truly tell you what the market is thinking and feeling. That's what you need to be listening to. Ignore all the other stuff. You're never going to be the guy that buys this and then risks 1 pip and makes 1,000 pips. That's only possible in demo YouTube trading view land. Okay, it's only possible in the fake guru land. It's not possible in real trading land. But as a real trader, what you need to do is they say, okay, now I've sold it. Maybe I'm going to sell over here. Maybe that's not an ideal place, but I have a reasonable stop. And I have to maybe endure a little bit of retrace against me, but eventually the price actually starts to go my way. That's the thing. It's you almost never. No trade is easy. That's the whole point of trading.
Yeah.
If you have logical entries and exits, then you can do really well. So oil, gold, those are a pretty clear structures.
So as of right now, you're sitting out of gold. You're going to wait to see what the price action does. Let's say we get some more breakdown here. Where do you think we stop? I know you mentioned there's a little support, but then it looks pretty clear on down.
Yeah, it is. I'm trying to for some reason I can't compress this chart. I'm trying to move it up. I'm trying to move it down. I can't grab my chart. Okay, hang on. Let me see if I can change the chart here. There we go. Okay, so if we look back, and I'm just kind of peeling out here again, 4-hour chart, peeling out, and now it's just kind of a micro. So this is the 1935, 1940. That's the next big level here. We start breaking that. Obviously, the round number is just a natural magnet for this thing.
Sure.
But then really what could shock the oil, the gold bulls completely is that we go all the way and just literally destroy their whole year. We do a round trip. It's not out of realm possibility that we could do a whole round trip here. Did we talk about the fact that I tweeted out that gold is the New York Mets of financial assets?
You did. We talked about that on Monday. Yeah.
We talked about that, right?
Yeah.
So that's my point is that it could really unwind. This is clearly from a chart. This is a very distributive top. It doesn't mean the other thing is about don't make too much about patterns. Every pattern. Actually, when I wrote my technical analysis book, I wrote that every pattern within it contains a counter pattern. So when you're looking at it this way, you're like, oh, it's double top distributive pattern. It's going to crash, going to come back all the way down, right? That's one way of looking. Or the other way of looking at it is to break out with a consolidative range, holds the lows here, starts turning back up. This is just going to be nothing but a consolidated range in what is otherwise known as a much longer term bull market, right? Which can also play out that way as well. So you have to be flexible. That's why, just like, we took a reversal setup with our trend setup, we have to look at the market from both ways. You can't be, unipolar on all of this. You have to have very, very flexible mindset and be completely prepared to do the exact opposite of what you were prepared to do yesterday.
Right. Yeah. Absolutely. Awesome.
Yeah.
Anything in the currencies?
Okay, so FX has been interesting. I mean, first of all, dollar makes you holler.
Oh yeah,
dollar makes you holler. We're at 140, which is just like now we're getting. Let's go to the daily. Now we're getting to that serious. Oh, let me just look at this. It's so high. I had to stretch it. Look at my screen. I can't even get to my screen. I mean, we're making that secondary move here. Do we go through to the 150s? I think that's way premature. But the next level for yen is 141. I mean, on a longer term basis, this is a massive bull wave, typical corrective move, and in the corrective move, we're holding higher lows. This is, by the way, very similar to what on a more granular level oil is doing, higher lows. Like right now, dollar yen is a buy. It's a buy the dips, sell the rips. It is not in any way, shape, or form. It's not giving you any idea that it's a sell. Now, maybe if it gets up to 142, it can't hold it, comes back down, then you could aggressively start to short it against that level. But until and unless it fails at that level, it's hard to do anything but be bullish, on dollar yen. So a dollar definitely, very, very strong. Cable, we talked about the idea that cable is kind of like cable is the recovery trade of the year, right? So this was the Brexit plunge, and then we're coming back. But we're kind of running out of Zoom. I mean, dollar is just simply getting stronger. We are running out of a little bit of room here. But having said this, we're basically not cable seems to me a very range bound trade from 119 to 125. It's a 6-penny trade, and we're now midpoint. And so there's really, you could say, okay, it's negative momentum, so I could short it. Maybe there's a little bit more dollar strength. Maybe we test, 122s. But I don't like, if I'm on a longer term chart, I don't want to be doing anything here. I don't see anything clear. It's just, mid range, and you can it's a punt either way. It can bounce here, just come back down, but there's nothing clear. And the point is that the other thing is, the question you want to ask yourself: how much do I have to risk to be proven wrong or right? Right? When you're in mid range, it's a lot, right? When you're at the edge of the range, it's not a lot to be proven right or wrong. But here you gotta risk a lot. So you're welcome to risk it, but then you have to size yourself properly.
Sure.
Euro is clearly topping. I mean, we talked about this, and Kay was like, she thought it was going to top out at 107. What's interesting is that even though ECB is more hawkish than the Fed, there's still big interest rate differentials, and also U.S. rates, besides from the Fed, just the Treasury bills went up to 6% because on this whole budget talks thing. You could get a actual like anybody can buy a Treasury bill and get a 6% annualized right now. That's very, very competitive in currency world. Currencies, remember, are basically ultra short-term bonds. And so whoever's paying the most, especially if the dollar is paying the most, really hard to compete against that. Even if the Fed, even if the ECB is promising higher, it's basically what I'm promising you in the future versus what I can get in the present. And right now, the fact that I can get good yields in the present really makes the euro a pretty sour proposition. And it's already, it's obviously turned at the top here. The great trade was here, but it's not. This is certainly not a place I want to be buying. I still, you could just sort of press it to the downside with a relatively tight stop, see if there's more momentum to the downside. But I would really, until we get to 105 and kind of see, what happens at this level. I think, to me, if I'm gun to my head, I definitely want to be short towards 105 rather than long. Now, if it's dead stops over here and it comes back up, holds 107, and just remember the key thing is stays there for 2 or 3 days, just does not budge, and kind of carves out a near-term higher low, my whole opinion changes. But until it does that, until it proves that to me, I'm going to be, selling it, because I think it feels like it really wants to drift towards the 105s. So that's the asset review.
Excellent, awesome. So, anything we should be looking out for next week? I know we've got Monday holiday, so it should be a little bit slower. What do we have on the calendar?
The calendar is definitely going to be dead next week. Let's go to my favorite calendar, the Trading Economics. Let's go to, just want to go to next. Oh, I think he's already preset for next week. Yeah. So we get Sunday. And remember, this is Trading Economics. And what I'm always looking for is just the red banner days, just the red banner stuff, because that's really the only stuff that's of any import. Inflation out of Italy and France is basically European inflation. Germany, all of that's going to be interesting. All that's going to be interesting just, relative to ECB expectations. The market is looking for a more muted response, and I think it will be more muted response. But again, surprise to the upside could really push things around. Canadian GDP, another interesting, print here, because I think what's the consensus here? It's 2.4, right? 2.4 against a 2.1 forecast. So it looks like a pretty strong bump in the Canadian GDP. That should be interesting. That should be positive, dollar CAD. ECB, Lagarde speaking, that's also important to kind of, know. Nothing else on, we have Chinese manufacturing. The whole idea, China starting to pick up pace, or really is the post-pandemic slump structural, meaning that China is kind of like turning into more of a aged, older economy with no longer flashes of its brilliance. That's going to be interesting. Here's the flash, European inflation. That will be probably the most important event next week on the 1st of June, right? They print until we get to on the 1st of June, we also get the manufacturing. So pre-NFP data, we have manufacturing data on ISM. And then after that, of course, the big event will be the non-farms on Friday the 2nd. So the first Friday of every month, we get non-farms. I think here, if it's positive, if it's in line, if it's mildly positive, if it prints 200, it's a non-event. the big event that could happen here, I'm not forecasting this, but what would move the needle to the markets if this thing printed like negative? Like that would be an utter shock to them. The market is so bullish, so hyped up bullish. Remember, the greatest trades happen where everybody is caught the wrong way, right? Where everybody is driving one way and oops, the whole bridge collapses in front of them and they gotta stop the cars. So that would be like a stop the car kind of event. I'm not forecasting it, but like that's something that I'll be looking for as a possible trading opportunity. Other than that, it's probably going to be flows, and obviously, hopefully, they come back from the holiday and do resolve this on the
debt ceiling.
The debt ceiling stuff, because I think everybody, whichever side of the aisle you're on, is tired of talking about it at this point.
Sure, yeah, of course. All right, awesome. Well, Boris, thank you so much. We appreciate having you. We're out on Monday, so we'll see you the following Monday. Yes. We'll see you guys then. There'll be post non-farms, and we'll see where everything is: oil, gold, everything. At this point, it looks like all cylinders go. The economy remains pretty much in good shape, but never be always anticipate the unexpected. So we could always have an unexpected event. That's what agile. We got to stay agile.
Exactly. Thank you, guys. Everybody have a wonderful
great holiday
weekend. Yep. Take care.